on and talk about IGL because they reported a weak set of Q3 earnings. The EBITDA per unit disappointed the streets, what came in below what was estimated, and the net profit also declined. Sonal actually caught up with the company's managing director, Kamal Kishore, to discuss their Q3 performance and began by asking about the decline that we've seen in EBITDA per SCM, as well as what we can expect from here on. Listen in.
Last quarter, we did 8.6, the PM. This quarter, it was 7.23. The major reason for decline has been that there has been cut in APM allocation twice during the quarter. Although we have been able to pass on some of the increase to the consumers by increasing the retail prices by 1 rupee each both the times in some of the GS. In the upcoming GS, we could not pass on because the prices there are sensitive. The consumers are very sensitive to prices. So we thought that let us focus on the volumes there rather than the margins. But in the existing GS, like Delhi, Noida, Greater Noida, and Ghaziabad, there we prices slightly to offset that. But of course, we could not pass on the entire allocation that was reduced to the consumers. So allocation, which was earlier at 87%, has come down to 5%. So from the 1st of January, there has been some improvement, both in the allocation, there has been slight increase in that, as well as the spot prices of gas have come down. Both these factors should help us in the fourth quarter as compared to quarter. So we see the margins going closer to 8. And the full year, I think we should be exiting at around.
Okay, all right. So you expect EBITDA per unit to increase going forward in quarter 4. There should be an improvement. What about volumes? 9 MMSCMD, that was the volume guidance that you had given earlier. Is there a risk to you achieving that?
So we have done 8.5 and we are confident that in the fourth quarter, we should be nearing around 9. So because most of the stations, we will be commissioning around 60 stations during this quarter. So, in addition to that, in some of the days of the week, we are already crossing 9 million per day. So we are hopeful that by the end of the fourth quarter, we should be exiting the quarter at around 9.
Okay, all right. So you will be achieving your guidance for volumes in this year of around 9 MMSCMD. But just an industry worry that we are seeing, Mr. Chetiwal, and that is that the volume growth has been lower versus the previous years that we have seen. Are we seeing a loss of market share to electric vehicles? Is there a threat to volume growth going forward the way we saw it earlier?
Oh, I think the CGD business, it takes time. Once you build the infrastructure, and then the volume comes in and the stations come online. Because, initially you start the GAs with the daughter booster concept. So there the cost of, supply is 10 rupees, 12 rupees it takes to start the stations. That cost comes down once it's online. And then you reduce the prices and then the consumers come in. So that's the sequence. So in some of the GS, and it will be with all the entities also, as and when the stations come online, so they can reduce the prices and then the conversions increase. In addition to that, now the LNG play is also starting that IGL itself is setting up 10 LNG stations. And the similar is the case with all other entities. MGL is also starting. And once an ecosystem for LNG develops, so those volumes will also pick up in that segment. So that's another segment that will help volumes. And the third most important segment is the CBG. Like IGL is also setting up 10 CBG plants. So just for your viewers, the CBG is the cheapest gas available in India right now, cheaper than the APM. So because there are no taxes as well as there is no transportation required. It's in your GA and you can immediately connect to your network. So that's also one of the areas that if we focus, we can bring down the cost and then pass on that benefit to the consumers. And then the conversions and other take place.
Okay.
So
I'll speak to you about LNG and CBG in greater detail. Just generally, before this infrastructure and this ecosystem develops, how will you look at volume growth going forward? Will you be doing more acquisitions? Are there more geographical areas that you are looking at? What is the game plan here?
Now, seriously, we are open to acquisition, but no serious proposal has come to us other than the existing ones where we already have 50% stake in MNGL as well as CUGL. In case of any of the proposal there, we are open to evaluating those opportunities. But we are aware that, it has to have some value, just acquiring GAs and then if it doesn't have a potential, then it will not make sense.
Oh.
But in our GAs, we are confident that whatever GAs we have acquired, some of them are relatively new, we are confident of increasing the volumes there and doing some innovations like some of the products we have to bring out in the market. One example I can give is the CNG in dumper. The used for ferrying sand, construction material, etc. So that is one segment because few of our GAs have got huge volumes of dumpers. So there we are demonstrating to the consumers by converting a few dumpers to CNG, and going forward in LNG we will also be doing the same, and showing it to them the benefits, both in terms of the economic as well as the environment.
Got it.
Like we have done an MOU with Concor where they are replacing diesel with LNG.
Yes, you had put out a release on that as well for the exchanges. So what is the capex that you have planned? FY24, you're talking about adding stations. FY25, you're talking about LNG stations. You're talking about CBG. What will the total capex be there? And what is the cash on books right now?
Capex will be in the range of 1,400 to 1,500. Only thing is we will be now judicious in our expansion of CNG stations. So instead of CNG, because CNG station as well as LNG station, capex wise, there is not much of a difference. We can use LNG station for dispensing CNG as well as LNG also. So capex wise, there is not much of a difference. Maybe 20-30% costlier, the LNG stations. So we will be judicious in our choice of putting up CNG stations. Rather than going for numbers, we'll be going for, the size of the CNG stations.
Okay.
Like, for example, if you put up a CNG station in OMC, there the number of dispensing points are limited. Only 1 or 2 you can put up. But if you have your big stations, there you can have 8 to 10 dispensing points, plus you can then expand to LNG also. And one more area is that we are doing a pilot in Delhi and NCR region, Delhi and UP, by putting up LNG conversion, from CNG to LNG. Whatever spare capacity is there with us in terms of compression, that spare capacity or the idle capacity, because as you know, the CNG dispensing, there is a peak hour, and there is an off-peak hour, and there is no dispensing hours. So in the off-peak and no dispensing hours, we can use the existing infrastructure to convert that into LNG.
Okay, that is the word coming in from IGL's management. By the way, BPCL